China surging overnight after securities regulators, said that the government would widen access to the capital market. Eunice Yoon joins us now with more. Again, 2 straight days of market-friendly stuff, maybe, Eunice.
Yeah, that's right. Beijing pledged substantial measures to stabilize the market, and investors are really encouraged by that. The expectation now is that the central bank could cut a key benchmark lending rate as early as next week. China continued to fuel this optimism by announcing that it was going to shelve a property tax trial that was planned for this year, and also by slightly shifting its stringent COVID strategy. The authorities now say that light cases no longer need to be hospitalized to preserve medical resources for the sick. It approved more rapid antigen tests for public use, and it's mulling Olympic-style COVID bubbles for factories so that they could stay open despite the bigger outbreaks. The tech hub Shenzhen said that it was going to allow these bubble arrangements for some of its factories to resume work in what they say is an orderly way. Apple supplier Foxconn will reportedly institute a bubble until Sunday. And then Hong Kong also announced that it would rethink its tight COVID restrictions early next week. So in addition, investors were encouraged by an FT report that said that China is now ready to compromise with the SEC on audits, offering more audit information and possibly clarifying a law that currently bars outside or overseas regulators from conducting investigations in China. But just as a word of warning or a reminder that the tough regulatory crackdowns aren't necessarily over, the cyber watchdog also republished its mission for 2022, saying that it needed to clean up the internet and prioritize national security. So we're seeing those two parts of the government, one that prioritizes the financial aspects as well as the economy, really still much in conflict with the national security folks.
Okay, Eunice, this is the easy stuff for you, the business stuff. Anything in the papers that give you any indication on the mood about that recent cozying up with these warmongers in Russia? I mean, do you read anything that people are saying that, tread lightly, President Xi?
No. So that statement that we had yesterday had covered a whole host of issues that investors were really concerned about.
The underlying thing, Judge, about these stocks is when everybody in the market hates them and you start getting analysts calling them uninvestable, you have to tiptoe into the tulips, because the fundamental reason for owning these is exposure to the Chinese economy and the consumer. The growth rates inherent in these names are 20, 30, 40, 50, 55% annual growth. You can't get that anywhere else. Now, yeah, there's policy issues. Yes, there's the concern about ADRs and all of that. But how else do you get exposure in your portfolio to growth like this? You have to hold your nose on the volatility, but the fundamentals are why you invest. And you pick your opportunities when you get people slashing them. They went on sale 7 to 9% on Monday. And look at the upside. I mean, look, yes, it's volatility, but this is a time to actually start to own China again.
The risk is still there.
Yes, you're right. You're absolutely right. But the question is, how much risk are you willing to take for how much growth?
That's
when
right.
You show me a name that's growing at 45%. I can't find anything like that stateside. And also, these balance sheets are huge. These are mega cap stocks. They're massive. You can't get that in the FANGs anymore. We're just not growing the FANGs that fast. You have to be a decade ago or even more. So you're now getting a chance to buy Amazon essentially 17 years ago. Why wouldn't you do that? Just because it's got a bad zip code, it's in China? There's a lot of people there, and they're going to want goods and services. I got to be exposed. I got to have some exposure to that. And I get a lot of flack for it, I got to tell you. It's hate mail left and right.
Many Chinese stocks have pulled back from yesterday's high, which is given because a stock cannot continue to go up without a pullback. But this creates a great opportunity if you did not get in on any of the stocks, such as Baba, JD, NIO. All of these Chinese stocks are currently down today. But if you still believe that the fundamentals are still there, this is a great buying opportunity. We have Alibaba that is currently down 100, but there's always a risk with these Chinese stocks, political risk, the listing risk. So before buying any type of securities, please conduct your own due diligence.